Hello everyone. So now we have completed module 5, that is filing of GSTR 3B return. Let us proceed to the Q&A session wherein we will cover all the topics that we have covered in the GSTR 3B filing. First question, describe the primary purpose of filing GSTR 3B. Is it a summary return or does it require invoice-wise details? Can it be revised after filing? So the purpose of filing GSTR 3B is to discharge the ultimate GST liability arising due to outward supply of goods or services. So the amount that has been disclosed as sales in GSTR 1 return and the corresponding GST amount that has been disclosed in GSTR 1 return will be paid off in the GSTR 3B return. So GSTR 3B is a monthly or a quarterly return for quarterly return monthly payment scheme filers. It's a self-declared summary return used by taxpayers to report their GST liability and ultimately discharge them. It requires reporting consolidated figures of outward supplies, inward supplies liable to reverse charge, input tax credits availed, and net tax payable. It does not require invoice-wise details for outward supplies. Once GSTR 3B is filed, it cannot be revised. Any adjustment or corrections must be made in the subsequent GSTR 3B filings. So in GSTR 3B return, the ultimate outward tax liability is determined and paid by the taxpayer. The final payment of tax is done either in cash or by utilizing input tax credit or partially by utilizing input tax credit and partially by cash. Also, any liability arising out of supplies that are under the reverse charge mechanism shall also be paid in GSTR 3B return. Next we have explain how a business computes its output tax liability for the purpose of filing GSTR 3B. Provide a simple example to illustrate the calculations. So output tax liability is the total GST of a business that it owes to the government on its outward supplies, that is sales of taxable goods or services. It is calculated by multiplying the total taxable value for the reporting period of the supplies by the applicable GST rates. So the formula for calculating the output tax liability is total taxable value of supplies into applicable rate of GST. So if a business sells goods for a taxable value of rupees 10 lakhs and the applicable GST rate is 18%, the output tax liability will be rupees 18% into 10 lakh, that comes to rupees 1,80,000. Moving ahead, a manufacturer sells goods worth rupees 10 lakhs at an 18% GST rate, 9% CGST and 9% SGST. What is their total output tax liability for CGST and SGST? So this question clearly states that the rate of GST to be charged is under CGST and SGST. It means this is a intrastate supply. So here the taxable value of goods is rupees 10 lakhs. CGST rate is 9%, SGST rate is 9%. So CGST output liability will be rupees 10 lakhs into 9%, which comes to 90,000. SGST output tax liability will be 10 lakhs into 9%, that is 90,000, and the final output tax liability will be rupees 1,80,000. This rupees 1,80,000 has to be discharged either in cash if no input tax credit is available, or by utilizing the input tax credit if available, or if the input tax credit is not sufficient to meet the total tax liability, then partial tax liability can be met through input tax credit and the rest amount can be paid in cash. Next, we have a service provider in Rajasthan provides interstate services worth 5 lakh at an 18% GST rate. How is the output tax liability calculated in this case and what type of GST is applicable? So here, a service provider in Rajasthan provides interstate service worth rupees 5 lakhs at an 18% GST rate. Since this is an interstate service, we have to charge IGST and not CGST and SGST. In case of interstate supplies, IGST is charged, and in case of intrastate supplies, CGST and SGST is charged. So here, since it's an interstate supply, IGST, that is integrated goods and service tax, applies. The taxable value of service is rupees 5 lakhs and the IGST rate is 18%. So the final IGST output liability will be rupees 5 lakhs into 18%, which comes to rupees 90,000. Next, a registered business has received goods from a supplier. The supplier, however, has not uploaded the invoice to the GST portal, meaning it is not reflected in the recipient's GSTR 2B. Can the recipient claim input tax credit for this invoice, and what is the current rule regarding provisional credit? So, if the supplier of goods or services fails to upload the invoice details in his GSTR1 return, then it will not reflect in the GSTR2B of the recipient of goods or services. Due to this, he will not be able to claim the input tax credit against the said invoice. So, the current rule, that is after January 1, 2022, mandates that input tax credits can only be claimed for invoices that are reflected in GSTR 2B. Therefore, if an invoice is not reflected in GSTR 2B, the recipient cannot claim the input tax credit for that invoice. The provisional credit of 5%, which was earlier used to be 10% and even 20% of the eligible ITC, has now been done away, and the recipient can only claim the input tax credit only if it is appearing in the GSTR 2B. There is no concept of provisional credit now. So the recipient should communicate with the supplier to ensure the invoice is uploaded in GSTR 1 or make adjustments in the following months. So if proper reconciliations are not done on a monthly basis, then there are chances that certain invoices are not included in GSTR 1 of the supplier, and hence the recipient is not able to claim the input tax credit against such invoices. So reconciliation is a must for every kind of businesses in order to stay compliant with the GST rules. Next, a business claimed input tax credit on an invoice in GSTR 3B, but it was later found that the goods were not received within the same month as the invoice was reflected in GSTR 2B. How should the input tax credit claim be handled in this situation, and when is the ITC considered eligible? So one of the conditions for claiming input tax credit is that the goods or services must have been received by the recipient. So according to GST rules, input tax credit can only be claimed when goods or services have actually been received. If the input tax credit was claimed prematurely based on GSTR 2B reflection, it must be reversed. The input tax credit becomes eligible only if the tax period when the goods are actually received. This reversal must be accurately reflected in the subsequent GSTR 3B filings. So here one question arises that if we reverse the input tax credit claimed due to non-receipt of goods or services in the month under consideration, then how it will be claimed in the subsequent period, as it will not reflect again in our GSTR 2B in the subsequent period. So the reversal must be made as per The rules of reversal. Such reversal should not be made as per the reversal under section or as per rule 38, 42 and 43. Rather, such reversal should be done under the other reversal options. Such reversal will be transferred to the input reclaim statement, and once the goods are received, it can be reclaimed in the subsequent month from the reclaimed ledger. So any reversal due to such reasons, either due to non-receipt of goods or services or due to that 180 days payment clause, must be made under the other reversal clause, or else the SSC will not be able to reclaim the input tax credit, as it will not reflect in GSTR 2B again in the subsequent period. Then discuss the time limit for claiming input tax credit for a financial year under the GST law. What are the consequences if ITC is not claimed within the allowed time frame? So according to section 16(4) of the CGST Act 2017, ITC for a financial year can be claimed until 30th November of the following financial year, or the date of filing the annual return, that is GSTR 9, for that financial year, whichever is earlier. Failure to claim input tax credit within the deadline results in the credit lapsing, and it cannot be used to offset the future tax liability. So any credit that has been missed and have not been claimed by the recipient of goods or services must claim it before the 30th of November of the following financial year, or before filing of the annual return. If this due date lapses, then in that case the taxpayer will not be able to avail the input tax credit in the subsequent periods. Next, a taxpayer has the following liabilities and available input tax credit for a tax period. Output tax liability under IGST is 15,000, under CGST it is 8,000, and under SGST it is 8,000. Input tax credit available, ITC under IGST is 10,000, under CGST it is 7,000, and under SGST is rupees 6,000. Explain the order of ITC utilization and calculate the net tax payable, if any, to be paid in cash. So the offsetting rules clearly states that first the input tax credits under the IGST has to be consumed. Next, inter-head adjustment of CGST and IGST is allowed. Then IGST and SGST is also allowed, but inter-head adjustment of CGST and SGST is not allowed. So in this question, step 1, utilize IGST credit rupees 10,000. So the total IGST credit is rupees 10,000, but the liability against IGST is rupees 15,000. So the entire rupees 10,000 IGST ITC will be utilized to pay off the IGST liability of rupees 15,000. After utilizing the 10,000 ITC under IGST head, no ITC will be available under the IGST head. Next, utilize the CGST credit of rupees 7,000 to pay off the liability of CGST amounting to rupees 8,000. The balance tax payable under CGST will be rupees 1,000. Then utilize the SGST credit of rupees 6,000 to discharge the SGST output liability of rupees 8,000. Again, the remaining tax liability under SGST after utilizing the ITC under SGST 6,000 will be rupees 2,000. So in step 4, we have to utilize the remaining IGST credit amount, that is 0. No input tax credit is available under any of the heads, and we have to pay the balance amount in cash. So the tax liability after setting off the IGST input tax credit under IGST head is rupees 5,000. We have to pay this in cash. Remaining CGST liability is rupees 1,000. this has also to be paid in cash, and the SGST liability of rupees 2000 will also be paid in cash. So the net tax payable in cash comes to rupees 5000 under IGST, 1000 under CGST and 2000 under SGST, totaling rupees 8000. So to pay off this output liability, the taxpayer must generate a challan and pay using the available options. Next, a business has generated their tax liability and claim input tax credit. They now need to make a tax payment using electronic cash ledger and electronic credit ledger. Describe the process within the GSTR 3B filing interface to offset the liabilities and make the cash payments. So GSTR 3B return cannot be filed until the output tax liability has been paid in full. So once the input tax credit has been utilized to pay off the taxes, the remaining balance is required to be paid in cash. And once the entire tax liability has been paid by utilizing credit and cash, the liability has to be set off, and only then the return can be filed using the DSC or EBC. So once the GSTR 3B form is filled and saved on the GST portal, the payment of tax title is enabled. Click on the proceed to payment tile. Then the system will display the tax payable and the available balances in the electronic credit ledger and the electronic cash ledger. The taxpayer enters the amount of input tax credit to be utilized from the IGST, CGST and SGST or UTGST credits against the respective tax liabilities by adhering to the input tax credit utilization rules. IGST first, then CGST and SGST in any order. So once the amount has been filled up in the input tax credit to be utilized column, the system automatically calculates the balance tax payable after offsetting the input tax credit. Then there is a balance liability. The taxpayer need to pay this amount in cash. They can check the balance in the electronic cash ledger by clicking the check balance. If there are some balances, it can be utilized. But if there are no balances in the cash ledger, then a challan is required to be generated. So at the bottom of the filing table, there is an option to create challan. Once the taxpayer click on the create challan option, it will be redirected to the challan creation page where the challan will be created. Once the required amount of tax that is to be paid in cash has been paid through net banking or any other mode, the taxpayer can proceed to make payment or post credit to ledger. Once this is done, the liability is offset, and finally the taxpayer can file the GST return by using the DSC or EBC as applicable. So this is the process of offsetting the liability. So the final question, describe the step-by-step process of generating a challan GST PMT 06 on the GST portal and making an online GST payment using net banking. So once the liability has been ascertained in GSTR 3B that is required to be discharged in cash, such payment has to be done through a challan. So first we have to access to the GST portal. We have to go to www.gst.gov.in and log into our GST account using our login credentials. Then we have to navigate to the payment section. Under the payment section, there is an option services. Under services, we have payments, and under the payment, we have create challan option. Once we click on create challan option, there we have to choose either it's a QRMP payment or any other payment. So for monthly filers, we have to select any other mode, any other payment. Then we have to enter the payment details, fill in the required details including the tax head, that is the CGST, SGST, IGST and cess amounts and select e-payment as the mode. We have to be very careful while entering the amount in the CGST, SGST, IGST and cess, because there are other options also like payment against penalty or late fee. So we have to be very cautious while entering the amount in the amount fields. We have to correctly enter in the tax fields, then late fee fields, then interest fields and penalty fields. Then we have to select the net banking and choose the bank. We have to then select the either the preferred bank or the bank name from the drop down list. Then we have to generate challan by clicking into the generate challan option. This will generate a challan with a common portal identification number, that is in short called CPIN. Then we have to make the payment via net banking. We have to click the relevant CPIN link which redirects us to the net banking portal of the selected bank. Then we have to complete the bank transaction. We have to log into our net banking account. We have to verify the payment details and authorize the payment. Once the payment is done, a successful payment will be displayed on the screen and we will be redirected to the GST portal where the transaction status will be displayed. The electronic cash ledger will be updated immediately and the requisite amount will start appearing in the cash ledger. Now we can use this cash amount to pay the outward liability against our declared turnover in GSTR 1 return. So this is how a challan is created and paid in GSTR 3B return. So that's it for this module. We have successfully completed this module also. Now we will move to module number 6. So thank you.